Hello and welcome to Post GST Simply Intaxicating. The much talked about GST has crossed the initial hiccups and the credit goes to all the stakeholders. The lawmakers and the policymakers have gone extra mile to answer all kinds of queries received from all corners of the country, from all kinds of industries. However, the credit goes to the taxpayers. The taxpayers are trying hard to understand the nuances of GST laws and ensure 100% compliance. But this cannot be said that all the problems are over. There are still certain issues. We have 4 domain experts to discuss today. We have Mr. M K Sinha, who was very closely associated with the GST Council preparatory work to the rollout of the GST and now associated with the CBEC, Commissioner CBEC. We have Mr. Bimal Jain, Chairman, Indirect Tax Committee, PhD Chamber. We have Mr. Praveen Khandelwal. He is the voice and the face for the small traders, the small businesses in India. And we have Mr. Sridhar, Senior Vice President, Hindustan Coca-Cola. So let me start with Mr. Bimal Jain. So Mr. Jain, please give us some feedback. The rollout so far, it's 3 weeks are almost over now. Receiving feedback from all corners, of course, from some of the members from the PhD Chamber and otherwise also your own clients. So what has been the feedback so far?
At the outset, let me tell you that as rightly stated by Honorable Prime Minister, GST is going to be a good and simple tax. We all are advocating and nation is with the government for GST. Now GST is evolving. What are the challenges we are finding? These challenges need to be looked into, like in terms of registration, some practical problem. System is not working or amendment field is not working. So there should be some kind of hand-holding to them. Go to the SME and MSME sector. We all are advocating for GST, but the kind of hand-holding required, little awareness, more awareness, hand-holding. 2 important things I would like to highlight. In terms of law is settling down. Law is being introduced from 1st July, but we have seen the kind of notification coming in and getting decided within a day, or circular coming in, or press release coming every alternate days. Law has to be, settling down at a faster note. And there should not be differences of opinion coming out one after another. So a notification coming today and resigned it tomorrow gives some kind of confusion in the mind. What is the exact position in terms of law?
Okay, so Mr. Khandelwal, आपका क्या feedback है? जैसा कि Mr. Bimal Jain ने बताया कि स्मॉल ट्रेडर्स को हैंड होल्डिंग की जरूरत है. क्या आप ऐसा महसूस करते हैं कि गवर्नमेंट की तरफ से और हैंड होल्डिंग की आवश्यकता? ऑल द गवर्नमेंट ने बहुत एफर्ट्स किए हैं, कई स्टेप्स लिए हैं, सीबीएसई के फील्ड फॉर्मेशंस इन्वॉल्व हैं, रेवेन्यू सेक्रेटरी खुद इन्वॉल्व हैं इस एफर्ट्स में. आपका क्या फीडबैक है?
There is a fundamental difference in imparting education by CBEC on their website portal. You have to visualize the things from the angle of a common trader and not necessarily who is in metro towns, but even we have to go down the line. Traders in general are not in a habit to use digital technology. So first of all, there is an urgent and important need to empower the traders with digital technology. The traders across the country, still large number of traders are not aware of the basic fundamentals of GST and their compliance obligations thereof.
But what exactly the Confederation has done on this front? Because the Confederation was aware of it, the GST is coming.
Confederation of All India Traders has organized more than 200 conferences across country in 120 days. And more than 1,000 conferences have been organized by our affiliates in states. But then again, we have our limitations. So therefore, the first and foremost is because, GST is a destination-based taxation system. That means ultimate consumer has to pay the tax. Then we need to understand who is the last mile connect with the consumer, the retailer. And if we are not able to educate and empower that retailer, the entire gamut of GST will be distorted to a great extent. If really we want to take GST down the line, we have to rope in the trade associations across country.
The government has done it.
No. So far not. they may have dialogues with those so-called apex chambers of industry.
Okay.
But not with the trade associations, which is working down the line and which is having, even with CIT.
No, but I was told that CBEC field formations are involving roping in local associations, various kinds of small trade associations, and they have taken the initiative.
It might have done, but we need to intensify it more to next level.
Okay.
That is all required. Per se, we are with GST. We also want good and simple taxation system in the country because we are visualizing the advantages of GST.
I'll come back to you later for some specific queries. Let me go to Mr. Sridhar. So now that 3 weeks down the line, as per your understanding, the inputs received from various sectors and your sector specifically, what are the issues which remain to be answered or solved?
I think, as both Bimal and Mr. Khandelwal said, I think it's fairly well settled, I must say so right now. The focus now lies on the transition, how my transition credits, the thousands of crores of transition credits is going to get incorporated into the electronic website of the government. That is one. And as for the small traders, as he correctly mentioned, what we can do, can we even think of a national scheme? Because we had so many state governments giving free computers. If you are a registered person or if you are a composite dealer and if your turnover is between 50 lakhs to 1.5 crores, why not give a computer with all loaded software which is necessary for the GST compliance as a whole and train one person of that trader's office onto that as a system conducted by the Government of India on a concessional scheme. Some big banks can come forward. Some people can even co-sponsor it as a corporate social responsibility project also. Now, going back to transitions issues, I must say so, this 3B, even if you see from middle and higher income group, higher, I would say, turnover groups, this 3B has put certain unsettlement with regard to the ASP programs.
Okay.
In 3B, there is a disclosure for sales to composition dealers.
Okay.
In GSTR1, there is no sales to composition dealers that need to be disclosed. Any statutory form cannot be disrespected. The purpose is compliance. So, but when you ultimately reconcile this July and August to the September that will go to flowing, will happen later on, this would really create a problem. Now, up to 25 people through their MDM process, which is the master data management process, any company above 100 crores was getting their MDM process updated. People were giving the codes. From a plain, visible, simple analysis of the code, 10 PAN numbers which is sitting in between and the prefix and the suffix, nobody could make out whether this person is a composition dealer or a normal dealer.
Okay.
Now, we have ourselves done research and we found out there is an inquiry system. Now, just imagine how many people will have to do inquiry and try to get this roped in before 3B is due if I have to really appreciate the spirit of 3B and fill that sale to composition dealers. Can I say that I will not file that particular column, this particular row? That is not the intent. When a government gives a form, the purpose is to obey it.
Right.
So these are the kind of transition issues. In between, even the sectoral groups also, between the third week, second and the last week of June, and second week of June and last week of June, this sectoral group interactions. Many points came from our industry also to our sectoral group. It was a great seeing the way CBEC really appreciated our points. Our only request is, it should come before August 1st. Now let us assume they are saying 90 days for transition filing. Must you not give me 60 days time to decide based on the sectoral group's final views of Government of India?
Okay.
And my TRAN declaration of 90 minus 30 is 60. There's not going to be another 30 days extension for that. So 60 days is time required. Now so many issues were raised. Stocks with converters. The entire nation, metals, engineering, medium engineering. How do you handle converters? GST came on 1st July. Nation didn't stop for GST.
Correct.
So the entire balances and what about the stocks? How? And these the doubts which did not get clarified were all raised with the sectoral groups. Now, right, and so many issues on principles of transition. We also said whether it is, these sections are of no relevance, whether it is 140 or 143. Three main principles should be followed. One is there substantial compliance under the old law? Did I pay tax under the old law? And was I very conscious of my fact that I have to file all my returns under the old law? If I did all these three, then all documentation errors, government should come with a circular, as Mr. Bimal says, without controverting on the same issue. If all these three principles are broadly met, your transition of 100 rupees to 100 rupees under the new regime will be protected.
Mr. Khandelwal, he has certain points and certain solutions also came from Mr. Sridhar, where why only central government? States are equal partners. So for that kind of a scheme, if at all is to be sanctioned, for the traders, then the states and center and even the CSR perhaps,
CSR is a great
Companies Act perhaps will be required. It can be a part of CSR and it's an ongoing exercise. So let me go to Mr. Sinha. Would you like to answer some of those?
Well, I am very happy to hear their queries, because when you implement a large reform like GST, the international benchmarks are well known. International benchmarks are, has the trade generally accepted it? Has there been any shortage of essential commodities? Has there been a sharp spike in inflation? These are the known international benchmark of rollout of any VAT reform. On all three, I will say that Indian GST has rolled out very, very smoothly. So part one of the rollout is over. Now you get into the compliance part of the rollout, and that is where all these questions are coming. So that is why I was very happy to hear the questions, because none of them related to the three of these fundamental points around which initial rollout is generally judged.
Right.
What you are seeing is there are places where trade has woken up little late to the law. The law was pretty much in place since December. Transition provisions, as we are slowly transiting the credit, etc. Trade is pointing out that there is a gap in law here, or maybe the compliance could have been more rigorous, which would have not resulted in problem, but large section of trade has not been able to comply with a particular provision, so give some relief in that filing of return. And then there are some problems in relation to IT platform, etc. Government is aware of it, CBEC is aware of it, state governments are aware of it, and we are doing as fast as we can. We are responding to the queries. As far as amendment in the rules are concerned, one tranche was done on 2nd. We will also be doing little more in a few days to come to accommodate as many queries as we can. Now coming to the issue of taking the idea of GST to grassroots level, where most of the traders perhaps will have to start slowly feeling that GST is part of their trade. Now this will take a little time. We are doing it as well as we could. All the field offices are operating as Seva Kendra, and within our resources we are definitely putting in the best foot forward. So I am quite sure that we are going to see a good and simple tax as Mr. Jain wants, and a better compliance from trade, and a better facilitation from the trade tax administration. So this is a paradigm shift in many ways about tax psychology also, how the trade perceives tax, how tax administration perceives tax. So those are softer skills, take little more time. Law has been done, rule has been done, clarifications are being given. IT platform has niggles which will be resolved. So we are moving, I think, quite well in the right direction.
My suggestion would be, if it is possible, those field officers may be mapped with our respective trade associations in that city. So that would entirely change the total scenario, and we both can work together for the betterment of the taxation system. That is number one. What Sridhar has pointed out, let me make it very sure. Traders of the country don't want anything free. We want a policy from the government to get it subsidized to a certain extent and align few banks for the traders, those who are not able to generate that much finance. The Confederation of All India Traders has already taken an initiative, and we have given a bundled product called BizGuru, which is plug and play.
Okay.
And for the persons, those who are not able to spend even 35,000 rupees, we have tied up with SDFC Bank, and SDFC Bank is giving them financial assistance, some 8.3%, something like that. Okay. So if these kind of schemes are supported or approved by the government, I think we will be able to take this down the line in a more cohesive manner.
Let me go to Mr. Bimal Jain. You know, as all of us are aware that the government is responding at a lightning pace if there is a query, if there is a doubt, through various methods. Of course, I have received plenty of questions where, you know, the queries are asking that what is the legal validity of the clarification coming in the form of tweets.
See, such tweets can give you some clarity for understanding, but it has got no legal sensitivity, no legal backing. And you have seen the frequently asked question issued by government. It comes with a disclaimer, it is only for the education purpose. You can't rely. Even one of the query is being asked as GST Pathshala, which is being organized by Government of India. Question responded, but that response was not correct. Later on, next day, press release clarifying the same. Whatever we are giving tweet answer or FAQ answer, it should be legally framed and appropriately incorporated in the law provision itself. Like there's one recent example of section 9, subsection 4, reverse charge from unregistered person. Mr. Sinha was saying that the law was there on public domain since 26th of November 2016. This reverse charge purchased from unregistered person was not there in revised model GST law. It was made part of final law with no input taken from the trade association. Like look at the life of any trade association, any businessman. If he's purchasing anything from unregistered person, taxable goods or services, reverse charge applicable. Recipient has to pay. But in India kind of situation, we used to buy many goods and services in cash. Peon is going to purchase stationery. You are purchasing number of items. Then reverse charge applicable. And then it is being stated, initially it was stated that we have to raise invoice per transaction wise. Later it got modified, consolidated one invoice, challenge. Okay, consolidated invoice. And they've given threshold amount 5,000 rupees per day exemption. But one consolidated invoice, tell me how many name of supplier I have to write down. That these kind of compliances, of course, we want that all jugaad should go away from the market. We want honest taxpayers should be praised. And they should be given all privilege. But the compliances should be made as good and as simple
so
as
do you think that for RCM, if there is a separate offline utility provided by the GST, that will do?
See, you're
all kinds of RCM invoices, if there is a separate utility provided by the
when you're talking about offline utility, you have to really understand whether the online utility which is required for GST 1 and 2 are being placed.
No, offline they are providing. The government has also stated, Mr. Naveen Kumar also said that we are providing this offline utility. Perhaps it is available.
That is meant for the small traders.
Right.
But the point that I think Bimal is trying to raise is that, let us say if you run one factory, a simple factory doing 20 crores turnover. Okay. Can you just tell that your head of operations should not buy consumables outside from the market for a 20 crore factory doing some light medium metal work? There would be per annum at least 50,000 to 70,000. I'm not saying cash purchase. I'm only saying unregistered dealers purchase. Right. There has to be. Yeah, now the effort that goes in to put that 50,000 uploading. Now let us think. Sometimes we talk about social equity. Are you aware that there are so many companies which have even told their factories, please avoid buying from unregistered dealers. Now you kill the social equity in the process. That man was making a livelihood. There is a larger social equity.
Allow me to now respond.
I would like to just say one more thing to sum up my statement.
Okay.
Since you started with the question whether this tweet, frequently asked question, has got any legal sensitivity, and then we are progressing further by way of press release, I said no legal sensitivity, but these kind of nuisances in the law need to be corrected on a faster note if really we want to have good and simple tax.
Now first I'll go point wise on various points which have been raised. First is that he has raised that in one of the Pathshala one question was raised and next day press clarification came. perhaps he also was of the view that the answer was not correct. Let me be very upfront that the question had nuances and the answer was correct for a particular flavor of the question. When purchase is being made from a business which is below threshold, then reverse charge does apply. When it is being purchased from a person who's not in business and the purchase is not in, the seller is not in the furtherance of business, then it doesn't apply. So these are two different situations. The larger situation in that context perhaps was of purchase from unregistered person, and therefore perhaps, that part of the question should have got the precedence, and this is what the clarification came. Second is reverse charge. Please note that when the exemption now has been given for purchase of rupees 5,000 per day, then effectively in a month it is a purchase of 1.5 lakhs, and in the year it is purchase of 18 lakhs, which is very close to your threshold of exemption. Therefore, as much of simplification possible has been achieved. Perhaps his point is, it is correct that initially it was not there in law. Some of the states have this provision and suggested that this provision should be there, and after working out the exemptions which is required, which is required to be given, this we will experiment with it. With 5,000 exemption we are hopeful, and with one invoice a month things should settle down. But if there are difficulties, government is alive to the issue of further simplifying the processes as much as is needed. Third point is, should the government be giving tweets and FAQs or not, particularly when it comes with disclaimer. You must understand that today we are living in an information age. The power distance has completely collapsed. That means people do not want a government or a tax administration which is not responding. The requirement and the environment has completely changed.
Yes.
So, requirement from the perspective of a consultant who has to bill his client, and the requirement from the perspective of a consumer or a small trader who has to become aware of law are completely different. And it is the second requirement which is much larger, because the GST as an idea has to percolate. It is in this light that these clarifications are being given, and he is absolutely right that these come with a disclaimer. Because if a circular has to be issued, then it goes through a much more rigorous legal process and approvals. In the process, the rate of response will come down. So, this is a via media where there is a serious question of law. Circulars will be issued as per the provisions of law. Till such time, basic questions of GST, which is more in the nature of making people aware, will go through the route of FAQs and tweets.
I would like to mention 2 points. Number one is, there are certain kind of anomalies, disparities and contradictions in different tax rates. Just for example, that LPG gas stove in 7401 or something like that, you have mentioned the burner with brass, but the burner with the mild steel, there is no mention. What they should do? Either they should go for if written nowhere, then 28%, and if a commodity like LPG gas stove, which is predominantly being used by a poor man, if it is on 28%, then it would be an injustice. So the second important point relates to mixed supply or composite supply. Like, I give you an example, like mobile. So mobile is a principal supply, attracting 18%, charger 28%, and earphone at 12%. It comes in bundle. Now, if and they got some clarification, then they were told that you have to charge 28%, whereas the law says the principal supply tax will be charged. So these kind of confusions are prevailing in the market.
Let me reply to both the questions. Sir. One, HSN is new for large part of the trade, and that is kind of creating trouble, as I can see. So more outreach, clarification on HSN will be one part of the feedback which I will take from here. Second is there, as far as specific case of principal supply and composite supply is there, the law is very clear, and it is pretty much aligned to international practice. When you are selling a mobile phone, which is a new mobile phone in a box with a charger and a earphone, everything goes. There is only one consideration, mobile phone. You don't, आप उसके consideration को 3 हिस्से में तोड़ते नहीं हैं. 10,000 का बेच रहे हैं तो 10,000 का ही बेच रहे हैं. So the mobile phone rate will apply. Now if the charger is sold independently, then it goes at the merit rate of the charger. Now if there is any other interpretation, let me be very clear that it is not correct. Composite supply is such supply which in ordinary course of business is bundled together. Correct. If there is artificial bundling, then it is a mixed supply where the highest rate will apply.
Sir, in continuation, just one more clarification because it will help the traders to understand. You have mentioned this mortise handles under 28% and lock is on 18%. Now and when it is selling in the market, so it is a box carrying both handle and the lock. So in this case, we are presuming that lock is the principal supply, whereas we are getting the other clarification. No, how can government suffer a loss of 10%? You
see, it is for tax administration also. For tax administration also of center and state. Very large number of ideas are new ideas. I am aware that very large number of people within tax administration struggled with the idea that when I am going to restaurant, there is one rate of 18%, whereas the input which is being consumed there may have higher rate. So is it not certain loss of tax? That is not how you have to look at it. Tax laws are driven by clear positive school of law. That is to say, what is written in law is the law. Yes. Ordinary course of trade में trade ही तय करता है. It is not for me to interpret or you to interpret how the trade takes place. It is to be interpreted in that context, not in the view of individual trader or individual officer.
Sir, just one point only. Classification and rate is an immediate need for the business operation. Lot many places tariff heading got changed. I can tell you in n numbers of example. Now, when it got changed, dispute persists in a trade, what rate I should apply, first part. Second part, when he's talking about composite supply and mixed supply, why we are forgetting Nokia judgment, charger and mobile? Why it came up and why it has gone up to the apex court? Only for the simple reason, charger was clubbed with the mobile. Coming to the third point,
please understand, Nokia judgment was written when there was no concept of composite and mixed supply in law.
Even today, repairing of car, my intention is to get my repairing done. But while repairing, he charging only 2,000 rupees for repairing work, but charging 20,000 rupees for spare parts. So repairing of car is my intention. Principal supply is my repairing. That is the intention. But 2,000 rupees as against 20,000 spare parts. So what is the principle? Here the supply of goods would be the principal supply or the servicing would be the principal supply. So these are very subjective points which may come up at a later.
No, but one thing, if you go by the nature of the industry, which sir was saying, then there will be more clarity. But what I wanted to mention about this HSN, if you go and look at the current way it has been defined, there are so many places in separate, whether it is 1, it is 5, 12, 18 and 28 also. Each of these groups, buckets, certain places 4, 2 is mentioned, certain places 4 is mentioned, certain places 8 is mentioned. Now the larger ramification is, if you go to the tariff, at the end of the tariff, it says, the interpretative rules to the Customs Tariff Act, because that is only now valid, there is no central excise tariff, will apply to the interpretation of these rates. It very clearly says so. Now, you can go one simple principle. In any, whether it is the old law or the new law, in the customs tariff and the central excise tariff, you had the principle of 1 dash, 2 dash and 3 dash. Now there is no 1 dash, 2 dash, 3 dash at all in the tariff. So will that not apply to this? But my only point is, overall, if you really look at only for those people who are used to classification, this tariff is digestible. Those people who are mere traders and who are more in the VAT phenomenon and they were not in the central excise phenomenon, to them this tariff is a huge course of understanding. And as sir correctly said, there must be some training programs on how to understand the tariff for the trade. I think he's 150% justified in his ask. That is something.
Two responses to this. One, that the customs tariff will be the principal document on the basis of which it has to be interpreted would mean that single dash, double dash, triple dash, all of those principles apply. So that clarifies your first point. Second point is, I am aware of very large number of traders who already have done this exercise. They have listed their commodity, have listed their classification as well as their rates. So I would like to believe that Indian trade is smart enough, and most of the people in trade by now know by heart what is their what is the classification and what is the rate. There are few places where because of differential rate, classification disputes can arise. I am quite sure that the rates committee will meet frequently enough and is meeting in a few days again. We'll keep looking at these issues as and when they arise and sort out and issue clarifications wherever required.
Sir, just in this context only, I will draw your attention towards 28%. Predominantly, 28% was carved out for luxurious and demerit goods. So, some items are pinching the traders, like auto spare parts. These are industrial inputs. Earlier, they were in 5% category. Even if you, and most of the small units were below the limit of excise. But directly from 5% taken to 28%, likewise, there are few items which I think this 28% needs to be revisited once again, and these type of items, their total revenue must not be very significant. But on the other hand, the small manufacturers of these items are suffering at the hand of big companies.
Tax rates are government's prerogative, and for me individually to commit anything will not be correct. But all I will do is to quote Honorable Finance Minister, who said that as and when efficiency gains are made and the tax base widens, perhaps we will move towards a more moderate tax rates. But that's a journey. You can't expect that to happen overnight.
There are a few more teething issues of the industry which was also raised in the last couple of gatherings. I think since Mr. Sinha is here, we should also raise this with them. First of all, the modus operandi, the DIPP notification came out, the circular came out on how the 58% of the unexpired portion of the incentives in excise exempt zones, which will be carried forward and given, 58% will be given. So many doubts have been raised by the industry. What happens if the contract packer was sitting in the excise exempted area? Now he will be only paying duty on conversion charges. He won't be paying duty because there's a new system under the law. So what happens to those kind of things? Now, if that is so, then secondly is what is the modus operandi? How things will work? Because July is already fast completing. No, we are more or less going to come to the end of the month. The second thing, these kind of problems also. Now, can we look at for before September and specific issues on transition? After they have addressed all the sectoral groups, a broad view on transition, that you put your transition, sir. Somebody is asking, there are so many traders who have asked us this question on our web portal. They are saying, sir, if I put my transition, let us say September, sir, then will the money come to my electronic credit account on this date, appointed date, fatafat? Said, fatafat nahi hai, sir. Please understand, we have to explain. Call the distributor, tell him this is how the process is. The government will have a verification process. This is how we should do it. Now, what kind of timelines they have in mind on verification? Because if there is a small scale manufacturer who's on 10 crores or 15 crores, his credit is getting carried forward. What is the timeline for verification that will be put on the electronic website for them to get? It's mere filing on Tran 1, then automatic or not. So, because that's hard cash on 1st of October. Now, that is second thing. Third thing, but which is very, very important, is that reconciliation process between July, August, and the one that will happen later on, when all the GSTR 1 to 3 culminates into the larger system, that is going to be a very crucial month. So there has to be some flexibility in time dates for that month alone, and the way things are going to be.
So these questions were coming naturally, now the journey we are rolling out, moving in the right direction. So of course the verification part, all those.
See, as far as credit is concerned, credit is on the basis of your own declaration. It is a self-declaration regime, self-assessed tax. Credit will also be availed on the basis of self-declaration. It is not that there has to be an intermediate verification whereafter credit will flow. Percentage verification or audit will be done at a later date. So please don't worry about that. We are not going to hold your credit till the verification process is carried out. It will not be like that. It will flow. The credits will flow. Some of them will get audited where we feel that the patterns of availment of credit do not match with the patterns of perhaps payment of taxes in the past. Those will be natural red flags for any tax administration. And problems relating to filing, extension of dates, these are problems as and when we will encounter, we will address. You have already seen GST Council come up with 3B. You have already seen GST Council say that, okay, if you have not taken your provisional registration even, then issue your invoice and subsequently at a later date issue revised invoice.
Correct.
So problems will be dynamic for next 6 months and problems will be addressed. That's all I can say, that the government will in time keep addressing the problems as much as we can.
Yes, Mr. Sridhar, in fact, I have received good number of queries from our viewers. I would like to ask a few of them, So, Mr. Sinha is here. One is with respect to HSN. So, can government clarify an HSN code mismatch due to separate HSN codes having prescribed under GST notifications rather than referring to customs tariff codes? 3 different sets of codes have got created. In MEIS script, related benefits due to 2 sets of ITC HS codes, one customs code, another is ITC HS codes. Many companies are not getting their MEIS script. This is one problem that the industry is facing. So it's basically largely HSN related thing.
MEIS script is something which they have to, perhaps this is a Commerce Ministry issue. I do not know as to what is the nature of mismatch which is causing this, but in the past, whatever, when you go and apply for a script, let us say your tax administration document, let us say a bill of entry or a shipping bill and the policy provisions of Ministry of Commerce, there is a mismatch. Generally, a certificate is issued by the tax administration after due verification, that examining as to what is the reason for this mismatch, and if it can be reconciled, script will be issued.
So this question is more prominent in terms of MEIS, ACS, credit script are considered as goods. What is the tax rate applicable? Today under VAT regime, it is 5% taxable. But what happened in GST rate? If it is not following,
the script is being sold.
Yeah.
Okay.
If I'm exporter, I get MEIS script,
Correct.
which can be used for the payment of my custom, excise and service tax. Now, excise and service tax got merged. It can be used only for the basic custom duty purpose.
Right.
So, if I'm selling these script in the market, what
Okay,
rate
what
going
rate
to be
it will
applicable?
attract?
5% or 18%? Nothing is being prescribed.
Today, under the right to use, under the service tax law schedule, it says if goods are sold at a particular rate, the transfer of the right to use will be at the same rate as that of the goods. That will give a larger
Leasing of car. Leasing of car. Car is chargeable 28% and compensation says same rate going to be applicable while leasing of car. So try to understand this component, and then leasing of car, again you have to look at ITC, input tax paid. When we go to 17.5 CGST Act, it is only allowing credit for the 4 region. It is used for further trading or transportation of goods, transportation of passengers and training. What about leasing? Renting. Okay. You will charge higher rate, but corresponding credit is being denied. So there are lot many things which is...
Who has denied the credit?
Nobody.
I will not respond to the question, and that is why I asked this. That please don't say that this has already happened. Maybe you need to relook at your interpretation as to what credit flows when a car is supplied, and can a supply of leasing of car also be considered as supply? Please have a closer look at that. I don't think the problem is as serious as you are perceiving.
Okay.
I just want to understand. Transporters and legal services have been exempted, and all burden has been given on us on reverse charge basis. Sir, I think it is little bit injustice to us.
No, you are strong. You can carry all kinds of.
Oh my God.
देखिए ऐसा है अब ये है कि इसमें trade two different perspectives of trade. One side said that please don't put any compliance burden on us. Therefore, the government puts it on reverse charge. Then you say, don't put this burden on us because we are not the ones who would be carrying others' burden as well. So, sometimes we have to do these balancing exercise as we go forward, and more segments of the economy get used to the idea of GST, perhaps we'll see less of reverse charge and more of forward charge. At present, the idea was to carry forward the practices of the old regime, roll out GST, then start cleaning it up, including the rates.
Is there one question we have is that which are the transactions deemed exports under CGST Act?
As of now, government has not notified any transaction as deemed export.
So they have some issues. In our industry, certain waste are generated which are being thrown out of our factory. We incur costs for throwing also. In GST, they have been subjected to certain tax rate. What to do? Pay duty or reverse credit?
As far as waste is concerned, if it is being thrown out, there is no consideration for it. There is no supply. But he has also said that for throwing out and managing that, perhaps he has hired some service. That service will be chargeable to tax.
Mr. Sridhar perhaps would like to handle this query. This is related to GSTN. It says that how can a supplier give HSN-wise summary of inward supply as required in GSTR 2? A purchase bill may contain multiple HSN items for which a single entry is passed in accounts.
Of course, actually, if you have supplier-wise details today, every company, as he correctly said, he knows his sales HSN codes and his purchase HSN codes. So, all the purchasers registers and the purchases are converted to HSN code wise. What is your purchase? I don't think so. That is an issue. Everybody has got his HSN code wise purchase. The question is whether is he getting it at 2 level, 4 level or 8 level is the question. But all companies or all establishments have got their 2, 4 and 8.
But this is not bringing any trouble in your credit flows. It is only a summary statement which has to be given in the return.
With respect to the transitional credit 60/40, there is a question that somebody is having the works contract and where they have service tax being discharged on service value and VAT being discharged on material value. So, whether any credit is available on this kind of works
Deemed
contract.
credit is not available to a manufacturer and service provider. It is only available to a trader.
Yes, now this gentleman is saying, why did the government bring in LET bond for the service providers when there was no such requirement under service tax law all these years? How does the revenue protect its interest by mere LET and bond? There are several documents being demanded from service providers without any uniformity at the range level. I mean, this is a typical CBEC failed formation related issue.
I understand that in services export, uniformity of document is becoming an issue. We will address this. We have taken note of this, we will address this. And as far as why for services also bond and LUT, in GST, the law doesn't really make distinction between goods and services. To the extent possible, the procedures are identical for goods and services.
There is a query here, the interest income on account of any deposits in an exempted service as per exemption notification 9/2017, serial number 28. Does this mean any person having interest income is required to reverse his common credits as per section 17(2) of CGST? Read with the relevant rules. He is talking about this interest income.
I don't know, means businesses do not have that large an interest income that there will be so much of reversal. It is, I do not know as to which particular segment of business have you come across these kind of, I have not really.
No, if it is pertaining to financial institution, NBFC, banking, for them separate
provision is there,
separate
50%
provision is there. 50%
for
of
regular
pro rata,
businesses, yeah.
whatever, either or option. Otherwise,
Other than that,
not required to be.
So, but at this stage, since we are talking about reversals and this thing, the government also talked about in that valuation rules that certain sectors, I think the 15 read with the valuation rules, there were certain sectors for which these inter-unit services, they said they will give exemptions.
Yeah.
And that was supposed to come out, and it says certain class of services will be exempted. Now it's about 20th July, sir. We should come out with some, and then the more we do it, the more practical it would be.
Agreed. Yeah, rightly suggested.
Then we have a query here which says that this, as per CGST section 24(3), a person is mandatorily required to be registered if he is receiving supply under reverse charge. Does it have an overriding power on section 22? In that case, if a school which is not registered under exemption scheme is receiving any such service, whether it has to be registered?
That provision is saying if it is reverse charge, then threshold 20 lakh is not applicable.
Right.
And look at that purchase of unregistered person, which is
No,
in
but
the
the
reverse
school
charge.
which is in the education sector is as such exempt.
It's such exempt. Now,
Exempt.
now for them it's a problem. They are per se exempt. No, education and healthcare both are exempted, right?
Right.
In case they receive some specified services falling under reverse charge 9 subsection 3 or purchasing from unregistered person,
Right.
which is reverse charge. So by default they have to take registration.
take registration.
And that is creating operational inconvenience.
Right.
If they, I would suggest that please flag this issue formally with all the facts, because if there is no output supply, then we can have a closer look at this, that if there is no need for taking credit, etc. Please make a flag it formally. We will have a closer look at it.
Right, correct. So we had lots of questions. Of course, there are many more, but we can't take all of them. So on this note, I mean, let me thank all my guests, for making wonderful suggestions for the government to take it forward and come up with more clarification to make the rollout a little more comfortable, relaxing, and compliance oriented. So let me thank Mr. Sinha for stealing some time out of his busy schedule, because he is a man in the hot seat, involved in all kinds of committees, and of course all my guests, Mr. Jain, Mr. Khandelwal, for raising valid queries, bundled together several queries. So it's a mixed supply from his side, Mr. Sridhar, and I'm pretty sure that my viewers will take, quite a few things out of it, the insights, the solutions being provided, and the clarity. On top of all this, the clarity about the GST law, various provisions, and if they have more queries, they could keep sending it to the government, to us. We are the facilitator, we bring it to the notice of the government. So thanking you all for watching TIOL.